Weekly rate update. I'm Craig Fuller here with John Paul Hampstead. JP, it's been a great week. Things appear to be coming back.
Yeah, the trucking markets are doing well. We're seeing upward momentum, which it's volatile. It goes up and down, but we're seeing higher lows week after week, which is great. And we saw a lot of really good economic data come out this week, which, especially for the freight economy, is really, really good.
I mean, I'm really encouraged by, we saw housing starts, I think was one of the best reports in many months.
Hit a 12-year high.
Oh, it's a 12-year high.
In August.
Wow,
yeah.
okay.
So most absolute number of housing starts for 12 years.
That's fantastic. Now, what do you think is just pent-up demand in terms of mortgage rates are coming down, people are feeling good about sort of the consumer economy? Is that what's keeping that going?
Yeah, I think a lot of people have jobs, wages are going up, and then I do think the catalyst has been 2 rate cuts in a row.
Yeah, and I think flatbeds, I think that certainly will help firm up the flatbed business, which has been really rough. And the other thing about flatbed is you actually have really good conditions in the oil markets. I mean, I should say, because of what's happened in the oil markets for domestic producers, it's actually a good thing.
Yeah, when you hear President Trump talking about drawing down the Strategic Petroleum Reserve, I mean, that's a bullish signal if you've ever heard one, right?
Yeah.
I mean, it's taking away inventory.
And I think the risk premium, if you think about supply chain risk of Middle Eastern oil, oil that's in countries that are unstable or at least have more pressure, political pressure, then that encourages domestic oil production and may take some of the political elements out of that discussion.
Yeah, it was interesting. I mean, the stuff about Iran and Yemen aside, it seemed like President Trump was looking at the situation as an opportunity to take market share, which can't be anything but good for domestic producers.
No, domestic producers are great, and it's good for trucking. I mean, ultimately, when oil prices go up, at least domestic oil, you end up seeing speculators come back in the market, investment come back in the market, which drives the flatbed industry and drives different parts of trucking.
In the long term, the bigger part of oil production that is represented by the U.S., the more in control we are of our own destiny, our own costs, things like that.
That's right. I got to ask you a question in terms of where you think the market's going. The market's much better. Would you describe this as a rocket ship or a bottle rocket in terms of the outcome?
It's a bottle rocket. We're seeing really healthy volumes. They're still up year over year. What's most interesting, I kind of think, is that expedited, which we see as a leading indicator for truckload, they're saying that they're booking more loads than ever. An expedited broker at Summit Expedited Logistics told me that their volumes are so healthy that they're actually declining loads again. So that's really great, but we just haven't seen a ton of upward pressure in rates. Brokers at the publicly traded carriers like Schneider and Swift both said that they're kind of moderating expectations for peak, kind of saying there's still a lot of capacity out there. They don't see how they can really get leverage on rates.
Yeah, I mean, rates are one thing. I think when rates are soft, certainly if you have exposure to the spot market, that's tough. But let's remember that the larger asset carriers, and frankly, anybody that has trucks, volume is as important as rates are.
Yeah.
The fact that volumes are coming back, particularly for folks that are looking at volumes to really cover their fixed costs, it's a really good thing.
And it seems like there's thresholds of you need enough volume for your trucks to run every day, generate revenue.
That revenue per truck per week ultimately is what you have to get to, that yield number.
And then beyond that, a certain more amount of revenue or a certain more amount of volume, I should say, gives you more options. You can take the best freight for a certain truck, the best freight for your network, broker other stuff out, and kind of have another step up in efficiency.
Yeah, you will see tender rejections. So volume followed by tender rejections and then followed rate. So if you think about the process, that volume number is really, really, really important. But volume's got to hit a critical mass in terms of soaking up the capacity. Then we would see tender rejections go up as carriers become more selective in their freight selection. Right. And look, from a very low base in early August, we're seeing tender rejections go up. So it is
Definitely.
more encouraging. But you're right, and I hear this much the same thing, is that rates have not gone up. Now, part of it is, if you go back and look at the spot rates in the summer, is they actually had a bit of a run. It wasn't huge, 10, 15 cents a mile, but they didn't have enough underlying support in the tender projections to really take that second run. Now, We'll see what happens in late September, October, moving into October as we move into the retail peak season. It's going to be really interesting numbers to watch in terms of direction.
So right now, the national average for dry van, exclusive of fuel, is like $1.43 a mile. If you look at the forward curves, the futures market participants are expecting a peak around 153 in December. And
that's on the national average.
The national
That's
average.
actually far off where it was last year, right?
It's not. It's down from last year, but what I think is kind of more telling, and what's more important, and the trend that we really have to keep an eye on, is that it seems like sentiment is cooling a little bit. So in Stonehour, you can look at the current forward curve. You can also look at the forward curve 30 days ago, forward curve 7 days ago, and kind of see where the market's moving. And it looks like pretty much the whole curve has come down about 4 or 5 cents in the past 7 days. So it's they still expect September to finish ahead of where it started, but expectations are definitely tempering.
Just the high peak is tempered.
Yeah.
And do you think that's going to follow through the rest of the peak, or do we think it's more of a tempering, or there was sort of this optimism going in where you went from a very low base, you saw a surge in volume, you saw some firming, you thought, well, here we go. You just never got to that sort of climatic moment.
Yeah, I think the real uncertainty is around how much capacity is in the market, how fast is it leaving. We're still hearing, seeing a lot of data from our research team showing that small carriers that have found their niche and are doing well are adding trucks. Yeah. Maybe the same trucks that some of the enterprise carriers are shedding. So it's difficult for, I think, people in the market to really get their arms around the capacity situation. That's always been the toughest thing for anyone to figure out.
For sure, and like you said, capacity seems to have still growing, albeit slower. There have been some bankruptcies.
Well, yeah. So the first time we've actually seen that capacity go down.
Okay.
But it's the small fleets are adding, and that has implications. A lot of those fleets run are regional as opposed to over the road, irregular routes. So it depends on where those trucks are in the country. If they're in the Southeast, for example, that would explain a lot of pretty low tender rejection numbers in the Southeast. Things have been pretty loose there. The expedited guys I talked to this week said that the Southeast is kind of their weakest market right now,
Yep.
and the Midwest, Chicago, Indianapolis is pretty tight and strong for them.
Yeah, for sure. It's one thing to watch will be the capacity situation moving into, if housing starts are strong, if we see this sort of fall through in multiple months, that will take a lot of employment out of the trucking market,
Right.
which will actually increase the shortage of drivers in the carriers they'll have unseated trucks. Therefore, you may see a situation where rates then will firm. And ultimately, it's what everybody wants, right? You can talk about capacity shortage, driver shortage, or no shortage, or whatever. At the end of the day, what the carriers that are in the market really want to see is less available capacity for dispatch.
Right.
And ultimately, they'll get it however they can, which means they want more volume and they want fewer drivers on the road.
Right. Yeah.
So.
Yeah. And so, we talk about this week after week, but I think it's important to keep our eye on it. Is that from a data perspective, from a macroeconomic perspective, and in the freight data, the setup continues to look really positive for retail in the fourth quarter.
And for 2020, I'm looking here. FedEx reported earlier this week. It was a really bad report. My view is that their exposure to international is really what the TNT acquisition has not gone well. The integration has not gone well.
Yeah.
They're sort of in this weird space with Amazon that's sort of uncertain what's really driving a lot of that. But also it appears to be a company-specific challenge. The air freight, particularly international air cargo, is really struggling right now.
Yeah, and I think like the main modes and kinds of freight where they have growth opportunities are much lower margin than their historical sort of express air business, where when they started, they were the kind of the only game in town. They could get whatever margin that they wanted, really, and that's kind of over.
And then UPS is UPS seems like a very well run company. Doesn't seem to have the company specific issues that FedEx has right now.
Right.
And it will certainly be interesting to watch. I think it's hard to draw conclusions from FedEx alone about the domestic freight market because they didn't see the kind of struggles in domestic. A lot of their issues seem to be international, particularly Europe, but they didn't see they didn't report that the domestic market was really struggling for them. So I don't think it's hard to it would be hard to make the conclusions that the domestic market is really struggling. In fact, I think we're seeing expansion in freight in the domestic market that could take us into 2020.
I do too. I think eventually spot will have to come up because we're hearing so many reports about spot volumes rising.
It may not come up. I think we've lived and the last couple of years as we've seen just sort of irregular. I mean, the last couple of years have been exceptions. We may be back at a base where spot's just going to move at a level that is not sort of huge on the upside nor huge on the downside. We may see a range that we're in, and we see a little bit of progression in rates, but you may not see the big runaway that we saw in spot past years. And so what I would expect to see is if we move into 2020 and the economy appears to be strong, I would expect to see contract committed rates. Maybe carriers get a 2, 3, 4% increase if that turns out to be true. But I don't know that we'll see a runaway spot unless the Drug, Alcohol, and Clearinghouse deconstructs the market or the ELD AOBR issue is an issue.
Yeah, those are the regulatory issues are always really hard to suss out. I mean, it's always hard to know how enforceable things will be. It's not the federal government that comes in to every carrier and looks at things. We're talking about individual state troopers from 50 different highway patrols.
And insurance companies ultimately doing it. So it may take a while. And look, last time there was a huge run-up in capacity shortage up until you had the soft mandate that went into December. We actually saw some deconstruction of the market. It was tightening, and there was a lot of instability. And then as the hard enforcement went into effect in April, the market loosened up. Capacity actually loosened. So that maybe will happen this time.
We'll see. I don't know. What else do you think about the market?
I'm bullish on volumes. I'm not overly bullish on rates, spot rates. I just don't see it, and I think it's just because there's a lot of capacity out there, and frankly, the market's becoming more efficient. I mean, part of the thing you have to remember is you have the digital brokers. I mean, C.H. Robinson reported just this week that they're going to put $1 billion in.
What do you think about that?
I think it's like they have to.
They have to. So
and they have to send a loud. I mean, look, C.H. Robinson has always spent that kind of money in technology, or has spent large dollars in technology.
Right.
I think Bisterfield has to make a strong statement to Wall Street and to the market that they're not going to let these new entrants steal market share for them. And it's $1 billion. If you think about, Uber Freight has talked about putting a lot of capital into the market for their business.
Right.
Convoy has raised $200 million, and they're probably going to raise more of that. But we're talking about if C.H. Robinson deploys $1 billion
in technology,
that's more, frankly, than Convoy, Transfix, LoadSmart, Next Trucking combined.
Right.
And so it's hard to know what Uber Freight's actually spending, but potentially we're talking about substantial amount of dollars. And we've seen JP Hunt spent 3 years ago, came out with a $400 million CapEx tech spend. And we've seen the results of an incumbent player deploying capital in technology and how effective it's been for Hunt. And I would never bet against C.H. Robinson's ability to A, know how to build technology because they've proven it, and B, to build a product that will work for the market. So we'll see that. I am really, really bullish on what C.H. Robinson's doing, as I am what JP Hunt's doing. And XPO has done quite well with that app as well. So I think you can't count the incumbents out. I think the good news is...
I don't count them out, but I think, if I may, the bear case for someone like CH is that, okay, 2018, the first year in 25 years, they lost market share. Everyone expects brokerage margins to compress over the next few years. We may be at peak brokerage margin. If CapEx goes up permanently, then what does the business look like going forward?
But if that's true, if we're in a situation where peak margins are behind us, C.H. Robinson has technology, but has had a very rich culture of using human brokers also.
Right. 15,000 people.
So they may have a lot of efficiencies that have not been disrupted through technology. There may be a lot of low-hanging fruit. It's going to be much easier, frankly, for them to get.
They can almost be like a railroad story, like a PSR type thing.
Exactly.
All of a sudden, they cut 30% of their costs, and they're printing money.
There's a lot of inefficiencies in their business model that could be, if you invest in technology, that you could churn out. And frankly, because of their scale, they have a lot more of that. And it's absolutely no judgment against C.H. Robinson. I think they're one of the best operators in the business. Obviously, you have to be at that scale and consistency. Right. I think they may have a ton of opportunity. They have the advantage of volume. They have the advantage of scale. They have the advantage of knowledge. They have the brand. I talked to
They've got data. They got money.
I talked to a tier 1 3PL a couple of months ago, and the CEO told me when they walk into any account, C.H. Robinson's there.
Yeah.
There is nobody. And you take the largest asset carriers, the largest 3PLs, no one that has that kind of scale, maybe with the exception of like an XPO, FedEx and UPS.
Yeah.
That's it. C.H. Robinson, you can't count them out. I think they're certainly responding. I think Bisterfield's leadership, you have to applaud him. He's not going to go down without a fight. No. I think it's pretty impressive. And look, it's not just CH, it's Echo, it's we've mentioned XPO, it's the large asset, even the larger asset carriers that maybe have been later in the cycle. Covenant's doing some work around digitization, US is doing it, Werner's doing it. I think it's going to be an interesting time, and I think it's going to be harder
Knight Swift is building a combined huge brokerage floor out in either Tempe or Phoenix, I can't remember, that combines all the people from Knight Logistics and Swift Logistics in the same floor.
I mean, I think the days...
really trying to leverage the scale and actually build a huge network.
Well, the days of the large asset guys sitting on their hands and saying, because we have assets, we don't need to invest in brokerage or technology, or that the truck itself is the important variable, forgetting the fact that the brokers and the 3PLs actually have a ton of variability and they're mode agnostic. Right. I mean, if you look at the success of JB Hunt and Schneider in terms of being mode agnostic, they have proven that you don't have to have a truck that you own to be successful. I think it's going to be an interesting time. And I think all of the existing incumbents are putting billions of dollars collectively into these investments, and I'm really, really bullish on
it. Is going to be incredible. I think the best brands, right, are going to transform themselves. They're going to maintain, their commitment to service and culture, et cetera, and history. But I think these companies are self-consciously transforming themselves.
They're self-consciously transforming themselves. They're investing in technology. They're changing the way they think about their business. But I tell you, I think the most successful companies in the next decade are going to be the ones that understand how to blend the culture with the technology and the marketing branding. And it's going to be something interesting to watch. Yeah. So I'm really bullish. I'm excited about the fourth quarter. I'm certainly bullish in 2020. And excited where this industry is heading. We're going to get into this very deep at FreightWaves Live on November 12th and 13th in Chicago. If you haven't gotten your tickets, please get them as soon as possible. It is getting really, really full, so we're excited about the audience that's going to be up there. We just announced that FreightWaves Live is going to be carbon neutral, so we're buying carbon offsets to offset anyone's exposure that comes to FreightWaves Live. And excited about seeing you there.
Our industry is moving faster than ever. Where are freight volumes headed? How will this affect capacity? And of course, what's the newest technology that can benefit your business? Those questions and many more will be answered at the industry's hottest Freight Tech Conference this November in Chicago. Come join us at FreightWaves Live November 12th and 13th at the McCormick Center. Visit FreightWavesLive.com to register.